Hello and welcome back to the channel. I told you all that trying to time the bottom in the market this time, it is like trying to catch a falling knife. Because like I explained in previous videos, the dynamic in the market are changing and are changing faster and faster and faster. And it's clearly that the Fed is injecting less and less liquidity in the market to fight the increasing inflation. And we know that the market in the past 10 years has become addicted to the Fed quantitative easing. That's why we see the market is throwing the high multiple names from the beginning of the year. But the retail, they didn't get the memo and kept buying the dip. Each time we have a pull down in the market, automatically the retail investors, they run and they buy the dip. Of course, not the rich and not the hedge fund. You and I, the retail investors, will be holding these back. And this is not only in the stock market but also in the crypto market. While the big whales are dumping, retail investors are buying in BTC. And what you read or hear in the financial news, if you want to make money investing, you must buy and hold on long period of time. What will you do if you are 60 years old? Does it make sense for you to buy and hold for 30 years in this kind of market when the hedge fund and smart money are moving their money and using computers and algos? Speaking about smart money, they become underweight technology and moving to value names. All this because of, like we said, the Fed new course of quantitative tapering. Meanwhile, retail crowds still dream about the short squeeze. Remember AMC? Remember GME GameStop? They crashed from the top, which is clear the apes, they didn't see the inflation going on. With that being said, let's go to the market coverage. Let's start with the market performance. We see that the Dow Jones is down 543.34 points or a decline by 1.51%. Nasdaq down big by 386.86 points or a decline of 2.60%. The S&P 500 is down by 85.74 points or a decline of 1.84%. Check the groups by sectors, one day performance. Every sector is on the down except of the energy, which is slightly on the green side. Let's check the futures. Futures are gaining all over the board. We see especially here energy, soft futures except of lumber, metals all over the board. They are gaining with big gains for silver by over 1.48%. Copper, because copper is very sensitive to the dollar, so copper also is gaining big by 2.11%. For the meat, we see live cattle and lean hogs on the green side, with a slightly underperforming for feeder cattle. Grains all green all over the board except of rough rice. Let's move to the chart analysis with the SPY. The SPY has a formation of head and shoulders, first shoulders, head, second shoulder, and did stop to the penny to the line in the sand we drew before of 455. The histogram has a red impression with downward indicators, as well as the RSI reaching a oversold territory. Maybe we will see a resume. Maybe we see a bounce, but I think the bounce will be shortly lived, and the downtrend to the downside will persist. Same thing we see on the Nasdaq with a a pullback on the support line of 369. The IWM, they breached the support of 210 and reached to the point of 207. This doesn't look good at all for the IWM. That means more pain to come in the IWM. The dollar index is building a bull flag. That means we will see a run on the dollars. Maybe we will see that the dollar will reach the $96. 10-year government yield has a huge run, and it's clearly that it's building a bull flag. Here we will have a consolidation, and then we will expect more upwards in the future. Let's take a look at gold. Gold start decoupling from the fact if the dollar and the 10-year yields going higher, the gold by default will go down. We see the dollar is decoupling from this narrative and choosing his own way, which is a good indicator for the dollar that the sentiments in general are changing in the market. We have a resistance at 1,834. If gold will break this resistance, we will definitely see a good run in the gold. Let's check the VIX 4-hour chart. We saw that each time we have a crossing on the MACD and a building of a green impression on the histogram, there is a spike in the VIX, and it's still early as the week still young. We expect a move to the upside, another pop-up maybe to $26-28 mark, and then a cool down as usual. We see AMC, they are down big. They broke the support of $20 and they are trading below the $20 mark. This means that more pain to come to AMC. This video is kind of on the short side as I was busy with other things. Thank you for watching, thank you for listening, and we will speak soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.